alaikum and good day. My name is Mohammed Saeed Alnahdi and I'm from 22A. Today I'm going to talk about our assignment in international accounting, which is issues and challenges of international taxation of multinational corporations in Malaysia. In the beginning, actually, the tax enforcement has long been an area of concern for politicians, tax officials, and society at the large. This is primarily because tax enforcement affects revenue collection and the government's ability to achieve its fiscal and social goals. There are known many loopholes in international tax legislation, and over the last 3 decades, uh, these loopholes have been exploited by multinational corporations. The cause of international fiscal problem were exploited by Morgan, who argued that profits must be declared where they were made. Today, multinational corporations make money around the world that may obscure their source of profit. The legislation does not align with the actual market climate because it contributes to excesses. Errol Bondoc pointed out the international tax arrangements between countries lead to treaty shopping, where the issue of tax loopholes starts. This means that contemporary international tax issues emerge from the uh, obsolescence of the current law. This is a complex system consisting of thousands of bilateral tax treaties. Errol Bondoc says, these coordinate national double taxation strategies induced by multilateral tax treaties. Solution to minimize the harmful effects. This offers the multinational corporation the change to buy in line with the treaty. Albert and Spengel have shown that established international law means that they are not associated with what really takes place and are not really up to technical development.
Hi, my name is Keerthana A. I'm going to present about the background of topic, which is emerging issues and challenges of international taxation in Malaysian multinational corporation. The emerging issues is a term of utilized in fields examines and which are intending to portray the way toward distinguishing and considering the issues that have not been compelling later. Most of the leaders bargain only with the developed issues that significantly less their future directions, which is very questionable. The organization regularly limit the degree of their compensation charge, assessment here and there of locally or obliged balances the expenses appraisal. The individual application system may drive charge on area pay only or in general compensation. Various power charge at both of the substance level and at the honor level or at any rate on sorts of adventure.
Hi, Assalamualaikum. My name is Ashikin Binti Abdullah. Now we will move on to the issue. MNC are considered to have many incentives to reduce their tax burden by operating effectively on economy of scale. Some geographic settings require tax rate differences where income transfer from company operate at a higher rate than those within the lower tax rate jurisdiction. This management of tax effect open up an economy model that can be utilized by many across the industry. However, there are some issues and challenges of international taxation in Malaysian multinational company or MNC. The first issue is the issue of international direct tax. The international tax framework provides several important guiding principles that include neutrality, equity, a fair share of revenue, and administrative efficiency. Administration is fancy. Neutrality is one of the taxation most essential concept. Moreover, tax jurisdiction in excess with the traditional rule of jurisdiction, the court in a country that have jurisdiction over individual and all transactions that take place within the territorial boundaries of the country. One of the main administrative problems is the identification of countries that have that jurisdiction.
Assalamualaikum and hi, my name is Siti Nortasni Binti Mohammed Yusoff, and I would like to present about strength and limitation in the multinational corporation. Multinational corporation can earn income not only from domestic source but also foreign source. Strength possessed by multinational company can help in terms of cash flow. Multinational companies such as McDonald's do not have to pay Malaysian tax, but it's subject to high royalty to get a place in Malaysia trade effort. The capital investment can help country economics to continue growth and help its production capabilities. Tax system also be collected from the sale and the service tax by Malaysia. Actually, this can help the country to obtain tax that's been levied for each goods and service. The system will make Malaysian achieve a status of developed country, which is can help the system be fair and transparent to all parties. The international taxation is significant because it can get a result for the country development. The limitation faced by the multinational corporation is new technologies. The business done by multinational company will increase the rate of tax payment on advertising through e-commerce that has obtained high profit since it emerging. When companies subject to the international taxation, the price of good or service will increase compared to the standard price. Every multinational company need to find the best alternative to ensure a group can own the price and the service.
In conclusion, Malaysia should benefit from the strength that multinationals in Malaysia will contribute to cash flow. That's why multinationals like McDonald's, IKEA, and others have to pay Malaysia's taxes. Any foreign trade entering Malaysia must face the international tax issue. Taxation supports the growth of a nation. However, foreign capital inflows from abroad are one of the strongest ways of stimulating economic development. Furthermore, the international capital inflow from elsewhere would help fund the current statement deficit. This tax allow for the purchase of manufactured products from developed countries,